Fantastic. Thank you very much. So Kincora Copper, KCC on the TSXV and also on the ASX, a hybrid project generator. We're drilling. The key value drivers in the next 12 months are really driven by further deal flow and with the drill bit. The usual disclaimers, this will be up on our website. I guess Brian, when he was doing his opening speech on the first day of the conference, really made a key point. When looking at exploration projects, there's a couple of key things: location, 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 people, people, people. And that's a couple of the key points I think I want to emphasise with Kincora. And what I've got up here on this map is gold-rich copper deposits around the world. Red's historical, yellow's more recent. What we're looking for is big copper-gold systems, predominantly porphyries. Porphyry supply over 60% of the world's copper. What we're looking for is the next big discoveries within a couple of world-class mineral belts. We're exploring the Lachlan Fold Belt down there in Australia. We're also exploring up in Mongolia. If we flick over, you can sort of see Mongolia up there. You can see that red blob up there as well. If you look at Australia, we've got the largest reserves of gold in the world. We've actually got the second largest resources of copper in the world. So what are we hunting for? We're looking for large copper-gold systems. We've got a very strong technical team. I won't touch on that. There's a slide on that later on. We're taking a portfolio approach to exploration. We've got 8 active projects, either with corporate or with field activities, which all have value catalysts and clear milestones that we're working through. And that portfolio approach is important because when you look at explorers, traditionally it's relatively binary. You hit, you have a great result, you don't, but you've only got 1 or 2 projects that the market will give you time and attention for. Taking this portfolio approach gives you an asymmetric return profile with the funding profile that we've got, and we'll touch on that in a second. We're a project generator, which is pretty common here in North America, and there's a number of very good project generators in this room, but on the ASX, this is a bit of an anomaly. This funding model isn't so common, and I think that's a real opportunity for us. And we're backed by a number of key North American investors. We just completed a $4 million financing in September, backed by Rick Rule, Jeff Phillips, and a number of good other names here. And I guess these investors are pretty familiar with this project generator model, and again are backing the team and putting a structure in place that gives significant leverage to exploration success. So with this project generator model, we're applying this to our copper porphyry projects. So far we've done 5 deals to date that have unlocked over 100 million of partner funding. We're doing some focused exploration on some sole-funded projects that this recent financing gives us capital to do. I guess we're pretty blessed. Speaking to a few other exploration peers in this room, I'm reminded how cheap on a relative basis exploration in Australia is. We're about to drill a project with a cooperative government grant from the state that we're operating in that will cost our shareholders less than 100,000 US. From listening to other peers in this room, exploring similar scale targets would cost multiple $1 million. So this capital that we've just raised lets us advance in a very focused way a portfolio of early other projects on a 100% owned basis. As mentioned, funded 4 million Canadian financing. Post that, we've got less than 43 million shares outstanding, so tight in terms of a register from that perspective. But more importantly, when you actually look at the composition of that register, less than 40% free float, and I'll go through that in a little bit more detail. Drilling and management fees ramping up. We only pivoted to this project generator model and saw fieldwork commence in the 4th quarter last year. Up until midway through this year, 30 June, we'd seen about 3,500 metres of drilling funded by our partners. Again, providing pretty significant leverage with the management fee coming in from a couple of those programs. Shots on goal. When you're exploring, you want to have as many rigs turning at as many good projects as possible. Within a 12-month horizon, we'll be drilling 7 different licences. I should mention that more deals to come. Our flagship brownfield projects that sit within mineral camps where they've already got 20 million ounce gold equivalent resource inventory and world-class mines, and literally are in the shadow of the headframes from those operations, we still retain. We're in active conversations with a number of partners on this management fee model, earn-in type model approach. So again, value from doing further deals and some of our flagship projects coming up. Structure. Again, as touched on, market cap about 43 million with less than 43 million shares outstanding. Management fee income, reducing corporate costs. We're probably one deal away from achieving our goal of being a self-funded exploration model. In terms of the register, you've got 30% of it represented on the board. You've got another 30% of it that came in this recent financing with a 12-month hold. Of that existing free float, which is about 40% of the register, that's about equally spread between the ASX and TSXV, and you're seeing good volume on both of those markets. So the project generator model. When you're looking for big copper gold systems, this funding model lends itself quite well, because what you're looking for is an asset that could have 5, 10, 20 billion dollars worth of value. The hard thing about a prize that big is how do you fund it and how do you have a structure that your shareholders can be rewarded from making that discovery. And the historical test examples there lend themselves pretty well to these mineral systems. Reservoir was a good porphyry discovery in Serbia, pretty short gestation between forming that company and exit. Greatland Gold, in terms of an Australian copper gold asset, even though it wasn't listed on the ASX, is a really good example. In that original AIM listed incarnation, when Newcrest was funding that discovery, it took a market cap from £50 million to 1.5 billion market cap without Greatland Gold shareholders having to put their hand in their pocket and fund that. That was done by the major. In terms of modern day porphyry examples, there's a couple of good ones. I have Inflection Resources here as a good example. They've traded circa 30 to 40 million market cap for a couple of years. They're exploring literally next door to us in New South Wales, with Anglo Gold Ashanti being the same asset level partner. When I look at relative valuations, here we are in the mid-40s. You're getting about 10 million EV for 7 other assets in the portfolio. In terms of where I think Kincora could be in a couple of years' time or a 12-month time, if we're able to earn out the existing flagship projects that we've got, get the results at Trundle and Fairholme that I'd expect, AMARC's a very good peer group in terms of results and cumulative earnings. Again, we've done 5 deals to date that are about 100 million of earnings. AMARC's got 200 million of cumulative earnings and about a $20 million spend on its flagship projects. So again, this funding model lends itself well to large copper gold discoveries that we're looking for. It enables us to take that portfolio approach, adding value across a number of those assets, so it's multiple shots on goal. People, again, pretty critical. The technical team there is led by John Holliday, Peter Lehman. John's probably the foremost expert in New South Wales copper porphyries. He originated and led the discovery phases of Cadia, which is the big copper porphyry in Australia. That's the key asset that Newmont bought Newcrest for recently. He's backed up by Peter Lehman, a very good senior geologist as well, best known for the Reko Diq asset in Pakistan that Barrick's currently developing, $4-5 billion copper gold system that is. Well backed up on the board with Cameron McRae, 28 years Rio Tinto. He built 4 development projects in 3 different continents. He lives in New South Wales. Luke Murray, Chief Operating Officer for the Bloomfield Group. Bloomfield are 4 generations coal miners in New South Wales. They're a private family office looking to grow and diversify into critical minerals. So great to have that in-house operating experience within the state that we're exploring in. Jeremy Robinson is a significant shareholder in his own right and represents RareX, which is a 10% shareholder and the vendor of a number of these assets. In terms of the advisory board, this has only been formed in the last month or so. Some familiar looking faces in the crowd today. Jeff Phillips, Michelle, Kerry, Laurie are all here. Go say hi. Our booth's 218. Brent Cook has also come on and a pretty well recognised economic geologist in his own right. So This is the portfolio. We're exploring. The focus really is in central west New South Wales there. There's two key belts in the Lachlan Fold belt. You've got the Macquarie Arc in the orangey gold. You've got the Cobar Basin out to the west in the grey. That's a significant producer of gold and precious metals. You've just had Harmony Gold enter that district with a $1.6 billion acquisition of MAC Copper, which is closing this month. I think you'll probably see some regional consolidation taking place in the Cobar Super Basin where there's excess milling capacity relative to existing resources. And we're just undertaking some airborne geophysics at our Southern Cobar project, which sits in the southern end of that belt, at our Condobolin project. We've consolidated a historical mining field. We've just done this airborne survey. We'll look to drill some new targets early next year, but that's a project that we're looking to do on a 100% owned basis. It's the sort of project that a junior can add value to relatively quickly and cheaply because it's a historical mining field. There was a very good discovery made last commodity cycle that's never been followed up. There's an existing mill within trucking distance down the road looking for third-party ore, and the route to commercialise that asset isn't significant in terms of time and money. If we have exploration success in this current program, the natural conversation is that counterparty that's got the mill down the road. The large copper porphyry projects to the east of that, they're the ones that we're looking for partners on. The green land that you'll see up in the northern Junee Narromine belt, that's a 100k strike. That, by a junior trying to fund that themselves, would be a mammoth task. That's where we've got Anglo Gold Ashanti as our partner there. In the first period from December to midway through this year, 30 June, they've drilled about 11,000 metres of drilling. We're receiving a 10% management fee on that expenditure, so we've got an income stream covering or significantly offsetting our corporate costs. And what we're seeing today is really good results. There's an area that down to the southern part of that where we're getting some very good visual indications, and I think in due course that'll prove to be a new discovery within this district. I should mention a project that we're looking to drill in the next month, the Northern Molong Belt, the Wongarbin project that you might be able to see there that sits just to the northwest of the Boda-Kaiser discovery. Boda-Kaiser is a new greenfield discovery in this belt. It's about 15 million ounces gold equivalent. That discovery's been made by Alkane. We're looking to drill a target here that our technical director, John Holliday, has been waiting to drill since 1996. And I guess a lot of people say, well, why wasn't it drilled? John was about to in 96, and then he got onto Cadia Ridgeway and Cadia Far East, which are the two major deposits that form Cadia, and that asset's sat there idle ever since. We've got a government grant to drill that. We've got Fleet Space as a partner to come in and do geophysics and further drilling after that. That hole will only cost us less than $100,000 US, and it will answer a 30-year question of, is this potentially one of the few remaining big intrusive complex left in this belt? And we think it is, relating to that Boda-Kaiser discovery, which is 15 million ounces gold equivalent. If it does, all of a sudden there's a very natural owner to co-develop that larger project. Down to the south, we've got our Molong Bolt project. We've got another new generation tech explorer, Earth AI. Earth raised $20 million in seed financing earlier this year. They are an AI company that only gets something out of making a discovery. They earn in for an NSR, and the scale of that NSR depends on the scale of that discovery. So from our shareholders' perspective, you're getting exposure to new technology, that new AI proprietary approach that they have, and they're funding those targets themselves. And there's no downside to us in terms of capital. They only get an NSR if they make that discovery. In terms of our flagship projects, which are the two ones circled there in red, seeking partners, as you can sort of see down that column, we've spent $11 million of shareholders' capital on our Trundle project. We think that's part of the rifted off part of North Parkes. North Parkes is Australia's second biggest porphyry mine. That is a big mineral system. We changed our funding model after we put $1 million into that project in 2023. We had good results, but it didn't move the needle from a share price perspective or from a technical perspective. We need a partner to come in and do the next 5, 10, 20,000 metres of drilling. It's very rare that a junior can have a project that's in a brownfield setting with that amount of geochemistry and geophysics that give you walk-up targets. And the same can be said for our Fairholme project that sits down in the Cowal district, Cowal block. Fairholme sits immediately adjacent to Evolution Mining's 14 million ounce gold flagship project at Cowal. That's producing over 300,000 ounces at the moment. You've got Newmont earning in with a junior immediately to the north of our Fairholme project. So a lot going on, and I guess deliberately busy in terms of having a portfolio of all these projects being worked up. In terms of Mongolia, this is a historical project. We had a partner earning in. They recently handed it back to us, having spent $1.3 million. And they've drilled, they've provided us a whole heap of new targets. We're reprocessing that data that they've done this field season. We're just going through getting a second mining licence across that whole project. There's an oxide component to an existing resource there, and if you put $4.50 a pound copper into that model, that oxide project looks really good. So the ability to unlock that potential development project, having the second mining licence, is something that's pretty important. We'll look to add some value to that project and reassess what do we do with that next year. Do we bring in another asset level partner? Do we do some further work ourselves? But you can see within this district, you've got Oyu Tolgoi, which is on track to be the 4th biggest copper mine in the world by 2030. You've got Xanadu Mines that was bought out with its flagship project, Karmatai, there for $160 million earlier in this year. You've got a $1 billion construction project that's being built within 40 k's away from us. The Bronze Fox project is the 4th emerging porphyry district in this really prolific porphyry district, which is in trucking distance to the world's biggest consumer of copper. So why New South Wales porphyries? I guess it's Australia's leading porphyry district. There are multiple world-class mines here. There have been 2 big discoveries that have made more than 10 million ounce gold equivalent discoveries and resource growth. You've had multiple earn-in deals. So while the project generator model isn't so common on the ASX, majors are revisiting New South Wales and doing deals with juniors, and you're seeing that amount of exploration going into the ground, and that's resulting in a number of new discoveries. Waratah Resources, which is listed on the ASX, recently with one new drill hole added 100 million to its market cap from a pretty good, albeit deep, discovery near Cadia. I guess the key point that I wanted to emphasise, this is, again, a pretty busy map, but you've got a number of majors within this belt. Fortescue, Newmont, obviously AngloGold Ashanti, Goldfields. A lot of the majors were operating in New South Wales last commodity cycle. When, I guess, the downturn happened in 2013 to 16, a lot of those groups stopped exploration themselves. Now they're revisiting growth. They're revisiting the same jurisdictions where they knew that that metal endowment would meet their thresholds, where they had comfort in terms of sovereign risk. AngloGold Ashanti and Goldfields, I'll use as 2 examples. They were exploring in-house within this belt. They've come in and doing deals with juniors and giving pretty generous deal terms to juniors in the process. Effectively, they're looking to outsource that exploration function. All those things that the majors aren't particularly good at in terms of headcount, lead times, ESG, pegging ground, they're effectively outsourcing that in these instances to juniors. And if we find what we're looking for and they're funding the capital to do that and quite often giving you a management fee along the way, there's enough in that for the junior and the major to do very well, and probably a natural exit for the junior along the way as well. How does New South Wales compare relative to the Golden Triangle? And both these 2 areas are the same scale, exactly the same scale landmass. The Golden Triangle, you've got $2 billion worth of cumulative market cap for explorers. It's probably more mature, even though the metal endowment's comparable, albeit the field season and cost of exploration significantly different. You're starting to see New South Wales catch up. There's about 450 million of cumulative market cap of junior explorers. One reason we're pretty confident that our Trundle and Fairhome projects that we're having conversations with asset level partners will find a home, and it's a matter of when, not if, is if this was sitting in the Golden Triangle, that would already be snapped up by majors having done deals with juniors. It's pretty rare, again, that juniors anywhere in the world can have brownfield assets near existing world-class mines. So Kincora's portfolio, 8 projects, again, that portfolio approach. We're looking to add value in a very focused way on our self-funded projects there on the left-hand side. We've got some pretty good partners to date on the far, I guess, your left, with Trundle and the Cow Block looking to be having partners in the near term. So this slide is deliberately busy. Again, it's all about having shots on goal, having the drill bit turning, looking to drill 7 different licenses over a 12-month horizon, multiple ways that we can create value with doing deals with partners, with exploration success, putting that money in the ground, with a corporate structure and a balance sheet that means that we've got that sort of leverage to exposure. So I guess looking to wrap this up, we're in a great commodity mix. It's a great time to be in the copper and gold sector. It's a great time to be an explorer with big projects in a market where the majors are increasingly looking to outsource their exploration function with well-run juniors with big projects, with big targets. So we're fitting that commodity mix and market very well. We've got an extremely strong technical team and we've got some good partners to date. We're actively on the ground with technical endorsement from these partners in at the asset level. In terms of projects, focused exploration from our self-funded projects, but really for the big copper porphyries, looking at funding that with the balance sheet of these partners. Structure's all important with exploration juniors. We've got a tight corporate structure, tight number of shares. We've got a management fee income model that provides scale. In terms of catalysts, hopefully the previous slide really launched on that. And while this project generator model isn't common on the ASX, I think we've got a real opportunity to differentiate ourselves and become the leading project generator on the ASX with that recognition already being taken place in the Canadian listing. So thank you very much, everyone, for listening into the story. We're at booth 218. Please come by, say good day. Any questions, more than happy to answer them. So thank you.